The next one is first home savers account. Not totally a tax strategy, but it could be related to it. This is for people who are over 18 years of age and haven't owned a property that they're lived in. So I've applied this a couple of times for people in pastoral type roles where they've lived in a manse and never actually owned a property that they've lived in. And I guess the other end of the spectrum is young people who haven't yet bought their first home. It's a fantastic way to boost your deposit, and how it works is that you put in, individuals can put in up to I think $11,000 each year, but if you put in $5,500, the government matches it with a co-contribution of 17% or $935. So what that can look like is that over potentially just over a 2-year period, if we look at the time frames here, we've gone from June 2010 until July 2013. It's just over 2 years. And if we've got a young couple in this scenario who have put in $5,500 each, that's $11,000 contribution into 2 separate accounts, so $5,500 each, they will have received $1,870 in government co-contribution. They would have got a little bit of interest, and so their account would have built after that year 1 to $13,500. If they do that again the next year, then the same thing happens. They get a little bit more interest, and then if they do it again the next year, we're saying that they won't get any interest because they're then going to go and use it to buy a home. But effectively what they've done is they've put in 4 lots of $11,000 or $44,000, and within a 2-year period it's grown to $54,000. So $10,000 in addition to what they originally had within a 2-year period. So a great way to boost your deposit and for a home, and or alternatively for those people that are at the other end of the spectrum in the retirement phase, then you're also able to direct this account. If you don't want to use it to buy a home, you can direct the money into your superannuation fund. So it is well worth considering. It's unique to a certain group of people, but if you're in that category, then it can be great. The other thing you can do is you can help children do it as well. Utilize the account if you've got children staying at home. A great way to do it is to charge them $100 a week board and put that $100 a week into their account. It'd nearly add up to the $5,500, and then they're well on their way to getting a deposit on a home. So they're the top 10 tax tips.